We Here we go. We have Mr. Ben from the UK. Make sure you write the name clearly, Kathy. We have Ben from the UK who is I don't even know what time it is in the UK. What is it? Hey Siri, what time is it in the UK?
2:30 a.m. Bruce.
2:33 in the freaking morning, and Ben's on the call.
It's 2:34 a.m. in London, England.
Unbelievable. What a dedicated individual he is. And Ben, I'm serious about, I'm going to start making the calls earlier. You don't have to be up this late, brother.
Bro, it's okay. I've been asleep. I just woke up now about 8 minutes ago, and I was like, man, I've made it. I'm up. So the camera's off, but I'm here. I'm just rubbing the sleep out of my eyes, and I'm ready to focus on what we've got for today. So looking forward to it, Bruce. Good
Beautiful,
to be here.
I'm going to impact it with some great information, what I think is great information, and then open it up for some Q&A. I love it. I said in the chat room, I said, we all make choices in life on whether or not to be here or not. And I see the Mr. Jim York has decided to join us. So I appreciate that, brother Jim. Good to have you on the call. So let's get started. What I want to talk about tonight is really, hang on one quick second. Yeah, here we go. What I want to talk about tonight is the type of environment. And this was really spurred by Ben. Ben asked the question about, hey, Bruce, what do you think about the market and where things are going? And I think right now, if you take a look at the market, it's we're at a key pivotal point right now. I do think that we go higher because I think a lot of people are going to get FOMO, you know, the fear of missing out. And I'll reflect that on the charts, and I'll show you guys what I'm taking a look at. But I think also, you know, I looked at my account. I was well into the green today, and that was with stocks like NOK and what was the other one that I had on? That was the semiconductor stock, AMD. AMD was the other one. I got that off of the bounce as I announced this morning. So I looked at that and I thought, wow, how's the market down? I don't have any bearish positions on. We're 130 points to the downside on the Dow, and I'm green. And that kind of led me into taking a look. And then Ben, your comment led me into taking a look at the overall market and the heat map, which I'm going to go through tonight. And I really believe that we're like in a risk on type of an environment, meaning that a lot of investors are going to be looking for stocks that they think are going to rebound and stocks that can really move and give tremendous returns. I think that's the environment that we're in. I was looking at the overall markets, and I'll pull up right now. I'll pull up the Dow, and I'll pull up the SPX, and I'll get into the heat map, and we'll take a look at that in a minute. Let me share my screen with y'all. Let's see here. So if we take a look here, we take a look at I'll pull up the SPX first. This is the one that I traded for years on the futures. A nice uptrend on the 4-hour chart, which I typically, as you guys know, I typically use, and I hope my computer doesn't give me any problems tonight. It looks like it's sluggish. I may have too many things open and too many videos uploaded on it. But here's what I look at, guys. So I look at, as you know, I look at the 821 and the 200-day moving average. We're well over the 200-day moving average, which does give me a word of caution, because if we stay over the 200-day moving average for too long, you're going to expect a pullback, but we haven't gotten one for a while. So what I'm looking at right now is the 8 and the 21, and it looks like they're just starting to bounce and get some movement. So there's a couple of areas that I take a look at. I'm looking at this yellow line, which is my 21-day moving average. I take a look at this, and that's the 4207 area. So I marked that on my charts, 4207. If it breaks below this could lead to a start of a bear market. I think the probability of it breaking below this is low, in my opinion. But we always have to trade what's in front of us. We always have to trade whatever the market dictates. What I'm taking a look at on the upside, if we take a look and we scroll back a little bit and you see this high right here where it says 4238, I think if we break above this area, and this is a nice bullish wedge right here. If you break above the 4238, I think that's where FOMO is really going to kick in. You're going to get a lot of retail investors that are going to be like, holy shit, this market's taken off, and I've been sitting in cash. And you'll see a lot of money come off the sidelines and move into the market. So I take a look at the SPX, and this is that's what that tells me. Let's move over to the Dow Jones real quick. I take a look at the Dow Jones, and I see something very, very similar. So when I'm looking at the Dow, I keep in my view that 35,000 mark. If it breaks above 35,000 with some nice confirmation, that's telling me, much like what the SPX is saying, you're going to get FOMO, that fear of missing out, and people are going to start diving into the marketplace. And we're very close to that area now. But the other area, so you always have to measure your downside risk. I roll in here and I zoom in and I take a look at where we're at here. So really, reward to risk for the upside, I think is really spot on. And even to the downside on some trades. And I'm going to outline a trade that I think, if you're looking, because Ben says, hey, should we take a look at some stocks that are going to trade to the downside? I think we always should take a look at stocks that are going to trade to the downside. You should always be what I say direction agnostic, where you're always taking a look and having something in your watch list that plays to the upside, something in your watch list that plays to the downside. So holding true to that, I have such a case, and I'll outline those tonight in just a bit. But when I take a look at the Dow Jones, same thing holds true. We're right on that moving average there. We're right on this moving average. And if it breaks below that, then my analysis will say, hey, look, we're trading the downside, and I'll start looking for more trades that have an opportunity of moving to the downside with great potential. So we do want to start lining those up, but I think the probability says we move higher. And I think if we get to that 35,000 mark and higher, you're going to really start to see the market take off. And I wouldn't be doing bear trades at that time. I would be mostly doing bullish trades, which I'm doing right now, mostly bullish trades. So this is what this tells me. I also take a look at other things. I'll look at like biotech. I think biotech's a great one to take a look at. If we take a look at the XBI, we see here, we were in a downtrend for some time. And look what we're getting here, guys. We're getting that we got the cross from the 8 and the 21 day moving average, move to the upside. We got this big move up here, but I always say, don't get FOMO yourself. Let the other people get FOMO. We're not going to get FOMO. So let this pull down a little bit to the 200 day moving average. And once it breaks above the 200 day moving average, typically you'll see stocks just really take off with momentum. So I am starting to take a look. And if you guys have any suggestions, I'd be open to listening to what those are. But I am taking a look at biotech stocks as well, because I like what this particular chart has to show us, and it's telling me be on guard and start taking a look at some biotech stocks, and there's an opportunity here. So I see this as a recovery play. So that's another one. Let me stop share here, and I want to move over to. Let me stop share here. And I want to move over to the heat, to the heat map. I don't know how many of you guys use a heat map, but you can go to, and Ben, I don't know if they have it out there in the UK. Do they have finviz.com?
Yeah, they do. Yeah.
Beautiful. So let me share my screen here. So some people have access, a lot of people have access to it, but few people really know how to use it. And I'm not going to go into tonight how to use the whole thing, but it's something, I'm telling you, it's something that could make you a lot of money if you take a look at where money's flowing in and where money's flowing out. So for those of you that are not familiar with it, this is finviz.com. They have a paid subscription and they have a free subscription. So you take a look at this. I'd probably say just get the free subscription for right now. You don't really need the paid subscription. The only thing you get at it with that, in my opinion, is real-time quotes, and I get that through Interactive Brokers and Thinkorswim. So I don't really need real-time quotes on this. But here's what I'm looking at. So a heat map, for those of you that are new, it kind of tells you where the money is, the big money, where the big money is flowing in and where the big money is flowing out. And it's important to know, because then you can do your top-down analysis. You can start to take a look and say, okay, this area here, I'm looking at the SPX, the Dow Jones, and then you start to take a look at the heat maps and say, so that's another layer, that's the industries and sectors, and it starts to tell you where the money's flowing. Then you start to take a look at stocks, individual stocks, best of breed, and then you start to take a look at options. So we're always doing a top-down analysis to determine where do we want to place our money. So when you're first taking a look at this, if you come over here to the left-hand side of the chart, I have it on 1 day performance. You see that, Megan? 1 day performance. What we're going to do here is we're going to hit this drop-down menu. I'm not interested in 1 year. I mean, I shouldn't say I'm not interested in it, but we are swing traders mostly, and this doesn't really serve a purpose for us as swing traders. I will take a look at it, but I'm mostly focused on this: the 1 month, the 1 week, and the 1 day. Now, check this out, guys. Pay close attention to this. And you can take notes on this later because I am recording this and stuff, but I appreciate you guys taking notes as well. But look at this. I want you to pay attention to this. So we're on the 1 month right now. Now, I'm not going to say anything. I just want you to look at the 1 month. Let your eyes do the work. Scroll across the chart, and what do you see? And you don't have to answer right now, but just take a look and what do you see? Now, gather that picture. I'm going to go to the 1 week. Now we're on a 1 week chart. Do the same thing. Let your eyes do the work. Let your eyes do the work. Don't hunt too long. Just let your eyes do the work, and what do you see? Now I'm going to go to the 1 day. Now let your eyes do the work and let it naturally come out. What do you see? So I'm gonna point some things out for you guys, and so you don't think I'm a complete nut, but I want to share some things with you that you take a look at. So I like to look at the 1 month, the 1 week, and the 1 day. This tells me triggers of things that are to come. So I'm going to start with Tesla. So if you take a look, and I'm looking at Tesla, and I see that. So you can look at other things too. Because they're all divided into, like, they got the internet connections, which is why I'm so hot on 5G, which is also why I entered into that trade. NOK, that's a 5G play. They got the technology structure. They got financials. They all break it down. So if you haven't used this before, give yourself some time to get used to this. They got the semiconductors. You got NVIDIA here, AMD. So they have it broken down. So it takes some time to get used to. But once you get used to it, your eyes will start to see things that you never saw before. And that will convert. If you take action, it will convert into money. So I take a look at this section here. And there's certain stocks that I watch quite often. Tesla's one of them, as you guys know. So there's Tesla, and we're on the 1 month. Now watch this. I'm going to come over, and we're down 8%, 8.8%. Now I'm going to go to the 1 week. There's Tesla again. We're down again. On the 1 week, we're down a negative 3.21. Now check this out. I'm going to go to 1 day. There's Tesla, and we're up 1%. So what does that tell me? So this kind of gives me a trigger. Stop share here. This kind of gives me a trigger that where the money is flowing in, where the money is flowing out. And it kind of leads me to things to be able to go ahead and start doing some research. So let me pull up Tesla on my chart, my 4-hour chart. So I'll pull up Tesla here. Tesla's been in a downtrend. But as we all know, Tesla can do what? Tesla can go ahead and move like leaps and bounds. What did I say we're on? We're on a risk-on environment, in my opinion. Big investors are looking for stocks that can really take momentum. So we take a look at this. Looks like we're just about to get across there on our 4-hour chart on Tesla. So I haven't entered a trade just yet, but I am definitely on my list of things to take a look at so it doesn't get away from me. So how did I come to this? How did I come to even spot? And this is what I do for a lot of trades, guys. You're getting a look under the hood of what I take a look at. I find a lot of my things by going ahead and looking at this heat map and being able to go do what I just did. I don't just look at one time frame. Just like when we're taking a look at looking at charts, I always say I base a lot of my decisions off the 4-hour chart. But what I'm doing is I do also multiple time frame analysis. And people think, why if you're day trading or you're doing a swing trade at short term, why would you look at a 20-year chart to take a look at where the KPPs are, the key pivot points? And I go whoop, and I narrow it all down. So I do the same thing with this heat map. So this heat map, let me show you another thing. And this will kind of go into kind of where I think the bearish trade will come from. So, and I'll tell you, the bearish trade for me is going to fall under apparel, athletic apparel. How did I get that? Watching these things here. And so I'm watching, and so I've been using these charts for so long. I know they're broken down. I take a look at certain sectors, I have my eye on semiconductors, and I'm actually in semiconductors, but I'm in the semiconductors like AMD. I think for me, that's a longer term play because that's a big, for cryptocurrency. The miners need speed. There's only 2 companies that really offer that speed for cryptocurrency. You know what they are? AMD and NVIDIA. So these are things that you want to start taking a look at, and they're both green. And so these are things that for me just make sense. So when I take a look and I try to break it down where I'm looking at like restaurants, I'm looking at footwear, I'm looking at apparel, and all of these things catch my eye. And I make it a habit of kind of taking notes. And that's why you got to have a notepad out, right? I know Megan does a great job of keeping notes and keeping a journal. And I would say you guys should do the same thing if you're not doing it already, because it helps you. I'll track. And this is the other thing people say, well, Bruce, why do you go out you go all the way out? Like I was on Workhorse. I had the October call options on Workhorse before it popped. And I got out 3 days later and it was like, I don't know, 120% gain on it. Why October? Why not July if you knew it was going to pop? Well, a lot of it has to do with risk, making sure that I control my risk. And if I'm wrong on the trade, that I'm not taking a big beating. Going out further, going in the money helps you from doing that. The same thing happens when, the other thing though that I do is I go out that far. If it's a trade that I know I'm going to trade over and over and over again, like AMD. I think Mike asked me, hey, Bruce, what do you have on AMD? And on AMD, I have if my memory serves me correctly, I have the October 50 call options. Why go all the way out to October? Well, AMD is one that I want to ride that train. So I'm taking a look, but I'm in and out, right? I'm in and out of the trade. Friday, I went to cash and now I'm back in on AMD. But what do I do is I start to get familiar with the option price, how the market maker manages the option price on those particular options. If I'm trading front month or weekly options, it doesn't give me any type of intimacy with that particular option, that strike price. When I'm out into October, I really get familiar with it. I can go in and out, in and out, in and out. And I mark down. I know Megan does this. I mark down where the stock price is, where the option price is. And that gives me insight into what the market maker is thinking about. So those are advantages on going further out, even if you know you're going to trade them short term. So I took a look at this though, going back to the heat map. I took a look at, I'm watching a lot of things, a lot of moving parts here, but I was watching apparel and I saw red here, even 1 month out. Let's go back here and take a look at 1 week. 1 week apparel. Let's look at apparel. Red, still red. Let's take a look at 1 day. Wow, still red. I wonder if that means anything. So what that does mean is that big money's not throwing their money into apparel. So what does that tell me to do? And this is, again, congrats to Ben. And I want to give a big shout out to Ben because someone thanked me for bringing up Workhorse. Workhorse was not my idea. Workhorse was Ben's. Ben said, hey, Bruce, what do you think about Workhorse? I'll take an idea from anybody. Some ideas are great. Some ideas don't mean anything. And I'll tell you guys what my opinion is, but I'm still playing Workhorse. I'm not in it right now. I got in on Friday, back in on Friday, got out for about like a 9% gain and got back out before the weekend. And now I'm looking at getting back in likely tomorrow. We'll talk about Workhorse in a minute and why that is. But take a look at this. So there's a couple things I look at. Trading can be a wonderful career for you guys, but it does take a lot of work and a lot of research. I spend a lot of my time researching this stuff. So when I'm looking at apparel, I like to trade stocks that I know. And even though I like this stock, it's one that I thought to myself, the chart looks prime to trade to the downside. So this stock, and it's very, very liquid, almost 6 million shares traded today. This stock is called Under Armour. So Under Armour, I like Under Armour, but I'm going to trade what's in front of me. So nice trend to the upside, And then look at this, guys. Just like I said, when a stock breaks above the 200-day moving average, it takes off. The same thing holds true to the downside. When a stock starts to, am I sharing my screen with you guys? I'm not. Oh my gosh, you guys are just too kind. You didn't say anything. I'm going on and on and on. So let me go here. So when I take a look at this, when I'm looking at Under Armour, and if you take a look at the trend here, sorry about that, guys. Nice upward trend. The same thing that I said holds true. When it breaks above the 200-day moving average, it takes off like a scolded dog. When it breaks below the 200-day moving average, it sinks like a rock. So we look for things like this. So again, Ben's comment says, hey, Bruce, should we be preparing for the downside? I'm always looking for the downside, but that just kind of spurred something in me. And I had been paying attention to apparel. So when he said that, I went right over and I said, let me take a look at Under Armour, see what it's doing. And it just broke below the 200-day moving average. So the other thing that I start taking a look at is I start scanning on options. Options can tell you a lot of different things about what the market's doing and what people are thinking about. So not only do we have this going for us, this nice downward trend going for us, and it just broke below the 200-day moving average, which I really like, because I could use my stop as this 21-day moving average. That could be my stop. If it broke above that, I could say, hey, I'm going to stop out. That'd be my uncle point. So my reward to risk is really, really good here. But the other thing that I start taking a look at, I start looking for what I call layers. I like to layer things. I like to be able to go ahead and say, wow, the markets are down. That's one layer. That constitutes taking a look at some bearish trades. I take a look at the industry in here, the apparel industry. Well, that's down. That constitutes as another thing and gives me more. I start to build my case on why I should make a trade. So all these things are going for us. We have the industry down. We have the market down. This is broken down below its 200-day moving average. Give me something else though. So I come over to my trade and I start looking and hunting and scanning. I start scanning the options, but I'm not looking at the call side of the options. I'm looking at the put side of the options. And Lord and behold, what did I come up with? I start to see some action on the put side that gives me an indication that this stock could possibly drop to the downside. So I'm looking at these things. I'm looking for which was the option that I was looking at. I know I saw action here. Let's see here. What else did I come up with? I go through the weeklies. Nothing really there on the weeklies. And then, Lord and behold, I come up to the July $12.50 call option. What do you notice, guys? Here we are scrolling. Look at these options here. A couple hundred there, 1,000 there. Wow, okay, 1250 there. You guys see what I'm talking about here on the put side? Then I come over here. I'm scrolling through. I'm scrolling through. I'm scrolling through. And look at this. 18,000 plus contracts in play on the July 1250 puts. Somebody knows something. Somebody knows something. Somebody's expecting some type of an announcement, something to come out where this stock, Under Armour, is going to fall. Now, I don't just trade on one thing. I'm not just going to trade on this unusual, what I call unusual option activity, but I'm looking for layers. So I got it off of my FinBiz, my heat map. That tells me that this industry, big money's not going into it. That tells me that. I got it from the charts. When I take a look at my charts, and my charts don't lie, price action doesn't lie. It tells me, wow, it's broken below the 200-day moving average. High probability. I mean, can it pop back up? Yeah, it can pop back up. But high probability says it's probably going to take a dip. And look how this thing has been running. So we're probably going to take a dip. I mean, man, if we took a dip down to here to $19, $18 a share, that could be something interesting. That could be something very interesting. And our risk is low because if we're wrong on the trade, we stop out at where? We stop out at just above our moving average, our 21-day moving average. And then we have the layer. When I talk about the layers, we have this unusual option activity. But just because I see this in the July doesn't say I'm going to do the July 1250s. Why? Because I'm too big of a chicken to do that. I don't like going that close. So I go ahead and I start to take a look at things like even the Octobers, right? Even the Octobers. Look at this right here, guys. This wouldn't be a bad deal. I'm all the way out to Octobers, even though I really don't want to hold this that long, and I probably won't because that's not my style. But the October 25, the 25 put options, they're going for 4 by 440. So we can probably pick these up for 420. So we're betting to the downside. So what does that say? Let's say we got the 25 strike price minus, let's say we pick it up for $4.20. That puts our break even at 2080. That means for us to break even, and that's not even counting extrinsic value, 2080 is the price point of our break even. But even if it hit 2080, it would still make money if it did it well before October, which I think it's going to do it well before October. So someone's betting that's going to happen in July or before. So the 420s, this cost in 420, doing the $25 call options puts our break even at $20.80. I said 18 would be a nice play. And that's where the next KPP is. So if it dropped down to 18, what would this $25 call option be worth just intrinsically, not even extrinsic value, just intrinsically? You know what it'd be worth? $7. Just intrinsic value is $7 on that. Almost a double just on intrinsic value. So it would probably be a double. If it got to 18, it would be a double combined with extrinsic value. So these are the things that I really like to start to take a look at to give me some insight into looking for trades. So again, it starts with taking a look at the overall markets. It takes a look at the heat map. And then I move on to take a look at a trade that I think has potential for moving down to the downside. Now, what about for the upside? So there's been a trade that I've been watching for a while. And again, a lot of unusual option activity on this one as well. So this one happens to be, and I think most of you are familiar with it. So UAA is on my watch list to trade to the downside. The October 25 calls is what I'm looking at. What I'm looking for the upside is not this one. Although sometimes you put in a wrong ticker symbol. Sometimes I have come up with trades. by doing
Hey,
that.
Bruce,
Yes.
can I ask you a question on UAA before you leave it?
Yes.
For implied volatility, if you're buying a put, do you want it to be low or high?
Anytime you're buying, you'd like it.
Did anybody else lose the sound?
I lost sound.
Did you lose sound?
Oh, you're back.
Yeah, I
Yeah.
lost you.
Okay.
So anytime you're buying, you want it to be low. Is that what you were saying?
Anytime you're buying, you want it to be low. That is
Okay,
correct.
great, because UAA is really low on
Is it very
IB
low?
right now. Yeah, we're at 43, and the low end is 42. So I mean, you're just barely over the lowest.
That's another layer, Megan. Thank you for doing that as you're enjoying that nice bottle of wine.
I know, you caught me on my night off, so.
I love it. Yeah, so good observation there. So when you're taking a look at options, puts or calls, when you are a buyer, you want implied volatility to be on the low side. So that's another layer right there. I even forgot to take a look at that. So that's another layer to take a look at. We have implied volatility on the low side. What was the high on that for the range, Megan? Do you know?
Yeah, so the high going out 120 days was 78.8.
Nice.
So 42 to 78, and it's at 43 right now.
Love
So
it.
really, really low.
Really low. I love it. Very, very good. So let me go to the last trade that I'm going to bring up, and I'll open up for some Q&A again. Is QS. So I like QS for a lot of reasons. So I don't know how many of you have traded this before, but it's been it's a volatile stock. You can see that it's had a move to the downside. They've already had their earnings come out. So what I take a look at here on this particular trade, there's our cross up. We have our cross up. I am very cognizant that we got this resistance at the 200-day moving average. So I'm very cognizant of that. But even if it just moved to this area here, the option I'm looking at would make us money, would still make us money. But I think there's a probability that it's going to pop above this. So I first started off by taking a look at the scanner, everything that we've gone through tonight. And then I look at these moving averages as they're starting to move up, getting a move back up to the upside. And again, I make it a habit, almost like a pilot with the checklist. I go through and I look for unusual option activity to see if there's something that somebody knows something that I don't know. And I found it. So when we go through here, you can take a look at different options, but these June 25 options, the ones that expire in 18 days, someone went in today. This just happened today, guys. So this, you got volume and you got open interest. So this hasn't even filled yet. 11,000 contracts that someone went ahead and purchased at the 37.50 and out of the money call option, 37.50 calls. Someone's betting that something big is going to happen on QS within the next 18 days. So this brings me to take a look at the stock even further. I take a look and I look at this and I say, well, if it got here, I'd be okay. But someone's betting that it's going to go to 37.50. And when I take a look at really the kind of the area, you go back here, you see this area here, guys. where you got the support. You have this area where you got the support. I look for where there's as many dots to connect as possible. Here you got support. What is that area? That's over $40 a share. So someone is betting the 37.50. Someone's betting that by in 18 days, they're going to have an in the money option, and that thing is going to be worth a lot of money. But again, knowing me, like you guys are starting to get to know, I'm too much of a chicken to do 18 days. If I was to do that, it'd be with money that I was willing to risk, money that if I woke up and lost it all, I wouldn't worry about. But I don't want to do that. I want to be able to put on a bigger, for me, I want to put on a bigger position. I was talking to Megan about this. I like to put on concentrated trades. So like Workhorse was a big trade for me. It was a concentrated trade. AMD, concentrated trade. So this would be a concentrated trade that I would take a look at, but I wouldn't do the Junes. But that helps me to understand that something's going to happen soon, but I still have the inclination to go out to the, in this case, there is no October. August would do for me. I would go out and take a look at the August, a lot of liquidity for these August calls, but I would take a look something in this time frame here, and I would have to go back and take a look if we did. So I start to take a look at if I did the 30s, $30 call options, my break even, I'm just going to use the ask price. My break even would be $36 a share, right? $35.90 to be exact. So, and where are we trading at right now? We're trading at 30.33. So again, I try to take as much of that extrinsic value out. So I'm paying like $5.90 of extrinsic value. Can I reduce that? Well, sure I can. I can go in the money. Let me jump to the 20s. So if I did the 20s and I use the ask price, although you guys know we're not going to pay the ask price, but I'm just going to use that for my calculation. I take 20 plus the 12, that gives me what? 32. A lot better than 36. So, or 35.90. So now I'm less than $2 of extrinsic value. So this is one of the reasons, guys, that I like to go in the money as opposed to out of the money. So this would probably be one of the ones I'd take a look at is the August $20 strike price, paying the somewhere between $11.30 and $12 for it, but looking for that move. So then I think I do another calculation. I think to myself, let's say that person that's buying the 37.50s knows something, and that support level that we look at, that KPP, that key pivot point, is something that's really meaningful. And the stock, boom, it goes to $40 a share. What would my August $20 call option be? Intrinsically, it'd be worth what? $20. So I'd almost have a double on my hands. In fact, I could rest assured and say, pretty certain that I would have more than a double on my hands, because I'm not even counting that $20 I said, that if we went to 40 and this is worth now, instead of 12, it's worth 20. Well, that's not counting extrinsic value. I'm all the way out until August. Do you think I'm going to have extrinsic value if this thing pops to $40 in the next 18 days? You bet you I will. So it may be worth $25 or $30 a share. So these are the things that I take a look at, guys. I'm just again kind of trying to give you insight into how I think. I look at how can I reduce my risk? Yes, I know somebody is bought a lot of options, call options, 18 days until expiration. So they feel pretty confident. Well, I'm not going to jump in bed with them. I'm going to do what I do, and I'm going to go out further, and I'm going to go in. In fact, I'm going to go in the money. They went out of the money and they went 18 days. I'm going 74 days and I'm going in the money. So still the same trade, but this is less risky for me, because what if I'm wrong? If I'm wrong and the trade doesn't do anything, now I like this area down here, because here, where would my uncle point be? My uncle point would be a break below this area here of about $27.97, $28 a share. I'd be like, boom, boom, I was wrong. The guy didn't know anything, and I'm losing money on the trade, but he's going to lose everything if it drops to that point. I'm going to lose just a little bit if it drops to that point. But if it moves to the upside and I got a concentrated trade, I got myself a double or more on the trade, and I'm okay with that. Does that make sense, guys? So hopefully you guys found that educational, delightful, and a little bit entertaining.
Hey, Bruce, would you scale into a trade on that one or hedge it?
I'd scale in. So I scale into most of my trades. So like even this morning, sometimes I kick myself, Mike, for scaling into the trades, but it serves me well to scale into the trade. It serves me well to scale out of the trade. AMD this morning, I went in pretty big chunks, but I scaled in. Like when I looked at AMD this morning, I already knew that because we talked about this, and I said if it came down to a certain area, down to this area, I was going to jump in, and I even drew this line here. And I thought, you know what? I'm not going to wait for it to come down here because I'm going to
I
miss
see
out
your
on it.
screen.
Oh, I'm sorry. Let me share my screen. Sorry, brother. Thanks for saying that. I get a little bit carried away. Let's see here. So when we take a look at this, we talked about this, and I said, hey, if it came down here, I was going to go all in, but it never came down here. And I looked at it, and I thought, I don't think it's going to go down this area. And so I had drawn the line when we were on the call, and I said, this is the support area. And sure enough, that was support. So this morning when it came down here, we pull on the 1-day chart, 1 minute, you can see it came down. It came down to that area. This is not showing it on this chart here, maybe the 5-day, 15-minute. So yeah, so it came down to this area, touched it, and I started scaling in. And I also started getting familiar with the option. So I'm out until the October. I'm out until October 50s is what I did. So I did the October 50 call options. That's mostly mine, 119. But I did the October call options on here, scaled into the trade at 31.10, I think is my average price. And we're trading at above 32, I think is what the trade is trading for now. So I want to hold this a little bit more, keep it in mind. We're just breaking over this 200-day moving average. And now we're consolidating. We're just breaking over the 200-day moving average. And anytime we break over the 200-day moving average on stocks, bright future, good management team, many times, many times, this is just the beginning, and the stock just takes off. And you can go back and look at just about any chart that just broke above the 200-day moving average on the 4-hour chart, and it takes off like a scolded dog. So I'm banking on that happening to this. I don't even really need it to move that far. I'd like for it to get to 80, 85 is really what I have targeted. If it moves to 85, I'll start to scale out of the trade. It'll probably go beyond that, but that's kind of like my target right now.
And how do you determine your target?
Again, I take a look at KPPs. So I'll look at where the stock has been. So here I take a look at this area right here. This bottom area coincides with this area, coincides with this area. You know, so I look at these things and give myself an approximation of where I think there's heavy resistance, where I think that if it breaks above a certain point, it's going to run free. So I'll probably start to scale to 85. It just depends on what it does at 85. If it approaches, 84.30, 84.50, 84.60, and it just kind of like doesn't move real quick, and there's not a lot of volume, I'll probably scale out in bigger chunks. But if it goes boom and it hits 85.10, I'll scale out in lower chunks. So that's why it's hard to learn how to trade, like even from a book or whatnot, because trading is dynamic and you have to be able to kind of go with it. So you have a plan in place. And it's like in my mind, I've already outlined it. Okay, when it gets to 84.30, let's see what it does. When it gets to the 84s, is it going to boom? Is it going to stay in the 84 lows, or is it going to go to the 84 highs? And what's that going to look like? Those are all things and scenarios like playing chess. I play out in my mind before the move happens. And I do the same thing. If it goes against me, what am I going to do? So, AMD is one that I think has some legs. I think the other trade that I hold is NOK. And I think this one's just getting going as well. Nokia 5G play. And I saw on the heat map that just keeps lighting up. More money gets plowed in. This area right here, this area that I have my line on right here, the 558 area, that was an area of resistance. And now this was a flag, and it broke out of the 558. I'm anxious to see what it does tomorrow. I think we go higher tomorrow. It looks like after hours, we're already up on it, but we'll see what it does. We'll see if it keeps on climbing. I'll tell you, if this thing really starts to get some legs, look where it's been before, 979. Even if it got to like $8, my goodness, I'll be doing a jig, man.
Do you think we missed the boat on that one?
I don't think so. I think this one is it depends on how you trade it. I mean, I like it long-term. When I say long-term, I'm talking the next 5 years for me. But as you know, Mike, I actively manage my trade. So I'll be in, I'll be out, just like I am on KOPN. I've been in and out of KOPN so many times. Would I be able to criticize someone for just buying and holding it? No, because I think KOPN is going to be a 10Xer. I think that stock is going to be, $100+ stock in the next 4 or 5 years. But I do this for a living, so I actively manage my trades. I'm not going to just sit there holding it as the markets, as I'm giving back to the market. I'm not going to do that. But so to answer your question on Nokia, I think we're still way early on this. I really do. Anything else, guys? Any other questions? We got some things in the chat box. Do we want to see what anybody says here? Hey, Dinger. Always there. That's Jim. So anyway, guys, anything else before we call it a night?
I didn't have a question, but just a comment, Bruce. The IV on QS looked good as well. And then on Under Armour, just interesting that the options, the unusual activity you saw was for July, and it looks like earnings is going to be reported July 29th.
So that's good to know.
So just watch that if you're watching it.
Yeah. Thank you, Megan. The other trade that, let me just pull this up again. Thank you very much, Megan. I appreciate that. Let me pull this up one more time, guys. So the other trade that I follow my rules though. I'm not going to break my rules. Was Roku, and look at this darn thing. And I think I posted this the night before over the weekend. So it broke out of this triangle, moved up. I was in part of this in this trade here, and then I've been waiting to get back in. But you know what? Actually, looking at it now, I don't think I missed it. So it moved up. I said if it got to what did I say in the chat? 337. I think that's what I said. 337. That I would go ahead and get into it. Right now, look at where we're at right now, guys, and see we're right above the 200-day moving average. So I want to see what this one does tomorrow. If it just kind of consolidates in the morning, I will take a position on this one as well, and I'll tell you why. Roku is the technical setup that I like. One, it broke above the 200-day moving average. If it can hold there, that area 340, I like that. But Roku is one of those stocks that when look at the movement as you zoom out, this thing could really take off. Roku is one of those stocks that it doesn't move a couple of dollars. Like today, it moved almost $14 in one day, and that's what you can get at a Roku. So there's times that I've gotten into this trade, and I thought, okay, I'm going to hold this for 3 days, and all of a sudden I take a look and I'm up like 35-40% in a matter of like 45 minutes. And what do you think I do? I start to scale out of the trade. And there's times I'll keep a portion of it on, but I'll scale out of most of that trade because I'm not going to look a gift. What do they call it? A gift in what's it called, Megan?
A gift horse in the mouth.
A gift horse in the mouth. Thank you. Even under the influence of alcohol, Megan comes through.
Got you, Bruce.
I love you. I appreciate you, Megan. So Roku, I think, guys, is another one we should definitely watch. If you get into it in the morning, just understand for me, my whole thing is I don't go for these shorter term weekly trades or whatnot. That's just not me. I'll be looking for probably September, probably October, call options on it. Now for something like this, if I know it's like right at the 200-day moving average, I may not go so far in the money. I may do something like right at the money. I just got to take a look at what I'm going to do. And if it moves up very, very quickly, and I've had that happen over and over and over, which is really why I like to trade Roku. If it happens, in intraday, I will take profits on the trade. But I think Roku technically has a great setup. And also some other background information on it is that Kathy Woods, those of you that know her, she's kind of like the rock star of the hedge fund world. But Kathy Woods, she said at one point, this is one of her number one positions, and she plans on adding more. So whatever that's worth, but for me, I just trade what's in front of me and what I see. And I do like what I see on the charts. Anybody else? All right. Well, guys.
Hello, Bruce. How are you?
Shai, how you doing? Good to see you, man. You look good. Every time I see you, you got this nice tan to you. Looks good.
Thank you. That's what the sun of Florida does to you.
There you go.
Bruce, I want to ask you, please. I'm just sitting down here and tuning in, listening to what you teach. But I'm just curiosity builds up. So you talked about the clothing, right? You talked about Under Armour. When you talk about one particular company, why doesn't trigger you to look on other companies like Nike, Lululemon, Adidas, and such? I know, for example, when you talk about activewear, a lot of ladies and a lot of fit guys go to buy Lululemon now, and I believe that that company is, the stock is maybe going up. So when you talk about what you talked about, why particular one company versus looking on the whole platform of companies?
Yeah, I look at them all, so I don't discriminate against any company. Whatever one I think has the highest probability of paying me. So like what I was saying earlier on, I don't know if you were on the call at that time, but I trade in layers. So a lot of things indicate, particularly when I take a look at a lot of unusual option activity, I take a look at the technical setup for Under Armour. There's a high probability this stock actually takes a little bit of a nosedive. So I'll look at that. So if Lululemon had the same type of setup and it had the same type of unusual option activity and it had the same type of low implied volatility and it was rising, I would certainly take a look at that as well.
Do you have the time to just quickly look your chart on that, and just out of curiosity, if it has any indicators?
On
Lulu-
Lululemon? On
Yeah, they
Lululemon?
just reported earnings this week. Lulu did.
Yeah. So look at this. Very, very different chart. Very, very different chart. I would not be short in Lululemon. So when you go back and you take a look at Under Armour, let me remind you what that chart looks like. A fresh
Okay.
break below the 200-day moving average. When you're taking a look at Lululemon, and you have to go back through and read the report on Lululemon on the 10K filings, and you take a look at this. So very, very opposite as of a trade. Here we have a fresh break above the 200-day moving average, not below the 200-day moving average.
So what is that exactly tells you? That they're trading high, so people are, so the stock is going up. So is that less of a profit for us?
If you want to trade it to the upside, sure, you could trade this to the upside. You want to go back and do more due diligence on Lululemon though before you make that trade. But technically speaking, I like where it's at technically. I'd want to go back and take a look at the 10K filings and see what the last earnings report said, which actually they just reported. So those
Yeah,
are things I'd take a look at.
They did beat earnings by a little bit, which reported, I don't know, on the 3rd. Yeah, June 3rd, they beat earnings, and then the IV is low. But I don't know.
Yeah. What have you found out about it, Shai?
I didn't find anything. I'm just saying, I'm just listening to you and hearing you teaching that. So I'm just, curiosity kills the cat, because the idea is that you know the market, and I guess you know what you're looking for indicators. But when you're looking on one sector, there are a lot of companies in that sector, not only one, right? So that's what my curiosity was all about.
Yeah, you got to go through and I can tell by the question you asked too, you haven't gone through the technical analysis portion. So I would encourage you to go through the technical analysis, and you're going to understand what the other folks and what I take a look at when it comes to technical indicators, and what that means when it breaks above the 200 versus breaking below the 200. That'd be the first step.
Okay.
Chris, can I ask you a question?
Go ahead, Ben.
So I shared with you, with the group, an article a week or so ago back about the inverse correlation between cryptocurrencies and certain stock sectors, as particularly the meme stocks like the AMCs, the GMEs, the NAKDs. There's another one called ADMP, Tilray. And I'm looking at these and I'm seeing quite a lot of upside activity in those stocks. I also noticed that you rarely talk about these stocks, so like the GMEs, the AMCs. What is the thought process behind that for you in terms of those stocks and the risk around those stocks and getting involved in trades with those stocks?
Yeah, Ben, you're quite observant. So there's a reason I don't talk about those stocks. Now I trade them. I'll trade AMC and others, but in my opinion, there's a lot of risk in them. So when you take a look, and I'll share this, and this is the thing, I want to be able to go ahead and have you guys set up for success, not for something where you're going to, because it doesn't matter what I say when when I enter a trade, if I were to say, yeah, I'm getting into AMC, I can almost guarantee you that there'll be a number of people that will either put all their accounts into that trade, or they will go ahead and not get out when they should. So trading requires a huge amount of discipline. And the trades I look, and that's why I tried when I get into trades, I'll say, hey, look, here's my uncle point. Here's where my stop loss is. But I do those on trades that I don't feel that are going to really move like an AMC or some of the others that have been in the news. But you take a look at this trade here. This trade was up, and AMC just ran up, got up to 77. I'm just kind of curious, people that were in the trade, how many actually scaled out of the trade? My guess would be very few, as it pulled back down and dropped. So, I even hesitated when we talked about workhorse, but you had brought it up. You had brought up workhorse. I thought, yeah, okay. Ben brought that one up. And, but even on this trade here, I hesitated to say I'm going to go into it, but I did go into it, and I did announce that I was going into it. And sure enough, the trade popped from the time we made the announcement of 9 to boom, it ran all the way up to 18. And when it got there in the morning, it was sitting at 18. And we even talked about that the night before. We said, man, it'd be nice if it would have filled the gap and got to 30, that'd be nice. Well, it came close to doing that. It got to 18. When it got to 18, I started scaling out in big chunks. When it hit 1750, I was all out. And then when it pulled back down and it started forming a flag, this is when I started getting back in again. So I've made 3 trades since the big movement, and now I'm sitting on the sidelines waiting for my next trade. But I don't know, it's always a difficult thing for me to do because, I know you do your due diligence, Ben. I know you do, because I can tell by the way you talk. I can tell the questions you ask, they're insightful. I know you do your due diligence. I can tell by the way you comment into the group, but not everybody's like you, Ben. So I have to keep that in mind. And when it comes down to taking a look and say, man, hey, big volume is moving into AMC, let's take a play out of it. I just wonder how many people can ride it from 77 all the way back down to 37. And that's what happened.
Yeah,
Does that
for
make
sure.
sense?
For sure, yeah, absolutely. And definitely people are getting caught with a bag at the top. That's a dead cert, right? That there's people who they buy in at a certain level, and then it goes to the downside and they get left holding the bag, as they say. And I'm hearing that a lot. It's just an intriguing thing that I saw. Like you don't mention it, and I was wondering, are you trading these? Are you getting involved? Is it something to do with the risk? Because there is a huge amount of risk with these, isn't there?
Yeah, there is. It's really a lot. It's really mostly to do with the risk and thinking, because I see some people put comments in. I hear some people ask questions, and I think they haven't done their due diligence, and it just so it kind of it restrains me from being able to say, hey, you guys, let's get in. And there's things that I do that are like lotto trades, and we have one of the guys on here who's been trading with me probably for the better part of the last 10 years, and you take a look at one of the other guys, Stuart, who trades professionally now. I'll chat with him on the side on certain trades because I know who he is. I know his risk tolerance. I know, I know I know that he's going to get out when he's supposed to get out, and I just can't say that about everybody. So it's sometimes for me it's difficult to be able to make that determination to say, man, do I talk about this lotto? I have things that I do that are what I call lotto trades. And some of the guys that have been with me know what I'm talking about. They're trades that have produced, 2,800% return in a very short period of time. But you're going in and you're risking all. So you got to, I tell people, hey, you're whatever amount you're risking, be okay with waking up in the morning and like, poof, gone. If you're not okay with that, don't do this trade. And I stopped making those announcements, except to certain individuals. I stopped making those announcements to the group because people wouldn't listen. They would go all in. And then if the trade didn't work out, it was like a disaster. So I thought, it's just not.
There definitely trades where you're looking at the screen and sweating when it turns around and drops, right? You're like, that's the stress of it. And I get that with the retail traders, they're jumping in and they're expecting it to continue to keep going up, and then it hits the peak and it drops quickly. And that's what I'm really noticing in the marketplace as well. I mean, I trade on eToro a little bit, and you see the comments like, is this going to go back up, and various different things like that, you know. Is this
Yeah,
going
when
to
someone's asking that, you know that they've done wrong.
Hey, Bruce, I put this, Jim, and I put this in the chat, and it's really loud here because I'm in a data center, so I apologize. But just to respond a little bit to what Ben was saying, when I look at trades like this is a trade that an AMC trade right now is not a trade that you can think about. It is a trade, if you're going to do it, you've got to watch it. Because, you know, going back to something that Bruce used to say when I met him, what was that now? 10 years ago, 9 years ago? You know, it's an emotional thing. AMC going up like this, there's a huge amount of emotion there. If you don't have the ability to get yourself out of it, you're going from the highest of highs to the lowest of lows in about a 15-minute increment.
Yeah. Yeah. Jim knows what I'm talking about. I mean, you know, Ben, I used to, and I want to go back to that. I just bought a property, commercial property, closing on it actually on Thursday, in the Santa Cruz Mountains. And I have a portion of it reserved that I'm going to use for the Traders Roundtable. And you can ask Jim. I used to host things and people would travel around the world. I mean, we had people from out of the US, much like yourself, and they would come in and we would freaking have a ball, man. We would be trading, we'd do day trading, we would do some trades where, I mean, guys would walk away with six figures from the event, just from the trades we were doing. And I miss those days. And it's something that, you know, I just bought this property. It's something I want to I want to be able to reserve. It's up in the mountains. It's really, really cool. It'd be a great trading environment.
Those were a lot of fun.
It would be a lot of fun.
That sounds awesome. Yeah, it sounds awesome.
It was good.
Those were a good time.
Yeah. Yeah.
I just saw some pictures from San Antonio showing from my feed the other day.
Yeah, we were all over the place. We knew the general for the Air Force, and he got us onto the base, and we were with the colonel. I mean, it was just, it was really, really cool. We would walk in, they say, "Who are these guys?" "Oh, they're traders." Yeah, it was. I mean, it's a cool life. It really is.
It looked at me funny because I had a ponytail down the middle of my back at the time.
Yeah, but I remember those days. Good stuff, man. But yeah, so Ben, to answer your question, man, long story short, I mean, I fight the urge to, because I think, oh, I'm making this trade, and it's like, should I put it in there? But I hesitate, man. I'll be honest with you. The trades I like to talk about and post in the group are ones that I feel confident that no one's going to get burnt.
Yeah, I hear that. Understand so completely.
I mean, if you want to hit me up like on a message sometime and, hey, Bruce, what you know, what do you think about this? I have no problem, because I know you're a big boy and you can handle it, but not everybody's that way, brother.
I'm prepared to lose it all. That's the thing, you know. I've done it before and I rebuilt back again, so it's not an issue for me to have the emotional detachment to it. But yeah, I understand completely. You know, I've seen it go up and drop down. I'm looking at GME right now, and I know they've got the earnings tomorrow on Wednesday, and I know there's a similar situation unfolding with GME right now, in terms of the same as what's happened with AMC. I think the options, there's been some unusual option activity on the 800s. Not sure whether it's going to go there, but it looks interesting. And I've been in this one for about 3 months in and out. I held it. In fact, I sold the stock just before it took off to where it's taking off to now. And you know, you always look back at it, you go, could I held on longer? And then it's like, well, no, take the bird in the hand rather than two in the bush, and be happy with it. But I'm intrigued to see where this goes to now as well. Yeah,
you know, I'll tell you, you know, since you're asking, I'll tell you my personal, and I might be missing something here. I mean, Megan, I'd like to hear your story on it and whatever you have to say, Ben. I don't understand the GameStop story, to be honest with you, other than what Jim said about emotion. You know, I would I would rather trade AMC because there I see a story. I see a catalyst. I see people wanting to get out and they're going to go to the movies. I don't see it with GameStop. I mean, I have kids. My kids don't do GameStop. They play the Roblox. So
The Roblox,
I don't see the games. I don't see the GameStop story other than emotion, and that scares me.
Yeah.
Well, to me, I was gonna say, to me, the GameStop thing is totally an emotional play. And the reason I say that is because my kids game. But, you know, GameStop was great when you had to buy the disc. Now, everything's all about download. So I don't see where GameStop maintains their market. I kind of feel like GameStop is going to become the next Blockbuster.
Yeah, that's
know,
that,
because-
Jim. That's my thoughts too, brother. And by the way, it looks like when are they going to let you out on parole, man? I just was going to ask that. I didn't want to ask it in front of the group, but I thought, what the heck?
Well, you know, I have to tell you, you know the bank that I do most of my work for. And I'm sitting here watching guys do work on about $10 million worth of equipment right now. So I get paroled tonight in a couple hours.
There you go, brother.
And then I'm off to Minnesota to do another job. So
Come back to the Bay Area, man. Let's go out to.
dude, I'm trying.
You're-
trying. I got to come see my nephew and nieces.
There you go.
Man. Give the kids kisses for me.
I'll do that, brother. But yeah, Ben, I mean, are you in GameStop right now? I kind of get the sense you are.
No, I closed all positions on GameStop, and I'm looking at it again now because I'm thinking, is it going to go to the high levels that they're talking about? I think there is a story there. There is a trader that's on YouTube who was interviewed by the SEC recently. There's the idea that it's about hedge funders shorting. It's about sticking it to the man, you know, retail investors getting involved and squeezing the shorts. That they were over shorted back last year, and there was an investor called Ryan Cohen who went in September. He bought a lot of shares. His shares went from about $9 to about $2.20, and he's now running for the CEO. So he's looking to become the CEO of the company. And the idea is that they're turning it round from a brick and mortar company into a pure e-commerce with blockchain technology. They're doing some NFTs and some Ethereum. So they're really speaking the language of the retail investor, the cryptocurrency investors. They're looking at the esports market. All of these types of conversations are out there. And there's definitely a compelling story there. So it's like the Tesla effect, you know, with Elon Musk. Elon's got his retail followers. You know, there's this conversation about how Tesla's overvalued and whether or not it's open to being shorted. I know that Michael Burry from The Big Short has shorted against Tesla, and he also was long on GameStop last year. So there's definitely some interesting stuff in the background there, and it's going to be fun to see because these retail investors, they're adamant that they want to squeeze the hedge funds. That's basically what they're saying constantly. Let's squeeze the hedge funds. Let's hold, buy and hold, don't sell, and almost a similar mentality to the cryptocurrency mentality, which is HODL, hold on for dear life, even if it goes down, keep hold of stock.
Yeah.
Too much for me, that though. Holding on when it drops, I don't want to be there, you know.
Yeah, I know it. I feel for the people that got into AMC and when it went way up to 77 and it dropped back down. But you know, it is what it is. You got to have discipline in this game for sure.
Yeah.
It almost feels in some of the meme stocks, like if there's a story behind it, I'm interested. And with GameStop originally there was the short squeeze story, but now it's more of just like a cult like following that hodl till the end, like hold forever. And I guess I'm not into trading for being part of a cult. I'm in it to make money, and I think that there's better opportunities out there that have less risk. So it's a lottery ticket, I think, with GameStop for, you know, and if another catalyst comes out, I'm not opposed to looking at it in the future. But I think right now it's just a lottery ticket with that cult-like mentality, and I'd rather look for another opportunity.
Yeah, and I love that because it's also about the opportunity cost, isn't it, Bruce? You know, if you sit there holding the stock for like 2-3 months and it's not moving, what have you missed in that time in terms of trades that you could have done with the liquidity that you've got available?
Yeah, that's for sure. Well, guys, I've enjoyed this. I think the lovely Megan Dorn took the words right out of my mouth. So it's exactly how I feel about it. I'm not opposed to it if the opportunity, and that's why I'm trading the workhorse. I mean, I think the opportunity is there. I think they will get part of that contract back. So, and I like the technical setup. So I don't think it's like the GameStop play. I really don't think it's like that. So at any rate, I just say, just do your due diligence, understand your risk tolerance, and trade well. So guys, with that being said, I'll put
Bruce,
this.
let me stop you there with one quick question on that AMC. You said to Ben, AMC at 70, and what is, translate this for me for money. If somebody comes with $10,000
Mhm.
and take the ride from the 70 to the 30, what is that translates to? Is that translates to $4,000 of income? What is that translates to?
If it goes from 70 to 30,
From what you showed in the AMC chart. So from where it is now to what you told Ben to come down to the 30 or something?
it's already down. It's already down to 50. It's down to 56. It's recovered a bit. It pulled down to the $36 range, and now it's back to 55 and some change.
Okay, so I guess you're talking about something that already happened.
It's already
Because-
happened. Yeah.
Oh, okay, but translates that to mean money. If it was at 70 and it goes to the 36, is that means $3,500 worth of profit?
50% hit that.
Yeah, that'd be a 50% hit.
A 50% hit.
Yeah.
Unless
so
you're shorting it.
Yeah, unless you're shorting it, right?
So shorting it means that you made $3,500.
It really depends on the trade that you had on. If it was a stock trade, yes. If it was an option trade, probably made a lot more than that.
Okay, all right. Got it.
All right, guys. Have a good evening. I'll post this. Thank you guys for all joining. Ben, thank you for staying up so late as always. And Megan, thanks for the last minute notice. And Jim, my brother, thank you for being here. Shai, always good to have you on, and Mike as well. And also Kaylin, congratulations to you, because I know that you are a brand new grandma. You have your granddaughter. I think it was a granddaughter, right? You're on mute.
Little boy, I actually had him tonight, but he left. His mom picked him up.
Oh, he's so cute. Last time we had the opportunity to take a look at him. Yeah.
Thank you, guys. This was awesome tonight.
All right.
Thank you.
Thank you, Bruce.
Thanks,
Thanks
guys.
a lot, Bruce.
All right. Take care now.
Thanks, buddy. Thanks
Yeah.
a lot.
You got it.